Hello, hello. Welcome to our third episode of our YouTube series. Welcome. My name is Dr. Golshan Madraki. I'm the Associate Professor of Supply Chain Management and also Director of Supply Chain Center at University of New England. And this podcast, this YouTube series is the product of this center. We are here with Andy Brenner. Again, you are hearing us talking about market, finance, and so on. Hi, Andy.
Hello, how are you, Golshan?
Good. Thank you for being here. I really appreciate it. And let's just start our conversation with my always question. What is going on in market this week?
Well, Golshan, there's a lot of stuff always going on in the markets. I mean, you still have a lot of stuff going on in the trade situation between China and the U.S. Today, or last night, they announced sanctions on Russia for oil. That sent the price of oil up 5 or 6% today, which sent the bond market down. So we had a bear steepening in the bond markets today. And of course, we have the first government number since the government's been closed, even though they're still closed, but they're going to come up with the consumer price index tomorrow morning. So a lot of people are fearful that that might be high and might send interest rates even further. In fact, we saw one gentleman buying a tremendous amount of puts on the 10-year futures, targeting a 10-year rate much higher than where we are. I think we went out about 4% as we closed Thursday night.
Nice. And how confident you are to this CPI data, knowing that the government is down?
I'm not confident at all in the CPI data, and I'm going to pretty much ignore it. And I think the market should do the same. The Fed is got two mandates, CPI and employment. It's very clear that Chair Powell and a lot of the members of the Fed much prefer to look at what is going on with the employment situation than the CPI. Because the CPI is tariff influenced, and the tariffs are not a long-term thing. Once they get set, they really don't add anything in future years. So I think the Fed is much more concerned about employment, and employment is not in a very good situation in this country. The economy is still doing okay, but the economy is basically being propped up by AI and a lot of investment in AI. And that is really benefiting the higher wealth aspect, the top 20-25% of the country, whereas we're seeing a lot of problems in the bottom 30%. There's been a lot of car bankruptcy. There's been a lot of foreclosures on homes. There's a lot of stuff in a negative way. But generally speaking, the economy is still generating about a 3% GDP.
Nice. And how about inflation? Are you worried about inflation? Do you think that now economy is in a stable situation, but how about inflation?
I'm not worried about inflation at all.
Okay.
I'm very worried about employment, similar to what the Fed is thinking.
Got it.
But at this point, I'm not worried about inflation. I think inflation will take care of itself.
Nice. And what about the rate cuts next week? It's going to be a big week.
Right. So the Fed meeting starts on Tuesday. They make an announcement on Wednesday at 2 o'clock. There, we expect them to cut 25 basis points, which is very well built into the market. There's like a 97% chance that that's what's going to happen. And they'll announce that they're still concerned about employment situation in this country, and we expect them to cut again in December when they meet then.
So you are positive that there might be another round of cuts in December?
Well, positive that it might be, yeah.
Possible.
I see a very high probability. I see about a 95% chance that in December the Fed will cut rates. But then again, you're going to have the government will reopen at some point. You're going to have new numbers. You're going to have new employment numbers. You're going to have new inflation numbers. So strange things can happen. But as I see the world right now, the Fed will cut once again in December. So 25 next week, 25 in December. That will bring the Fed funds rate down another 50 basis points.
So let me ask you another question related to your first statement, first question, technically the answer of the first question. So stock is going up slightly this week, and I've heard that you think it's because of the meetings of President Xi and President Trump. Do you mind if you elaborate on that?
Well, at the beginning of the week, we're in a risk-on situation, meaning that there's still a lot of money coming into the stock market. I forget the exact numbers, but I think I quoted them yesterday. The amount of European buying so far in the month of October, the amount of international buying, foreign investors buying U.S. stocks is, I think, 22 billion. And I think that brings it up a little over 300 billion for the year. So we have a tremendous amount of money coming into the U.S. stock market. There is no country that can challenge us in AI. There's no country that can challenge us in electricity production. There's water and everything else that is necessary. So we are getting all the money. Whereas we might be, 5% of the world's population, maybe 3% of the world's population, we're 50% of the world's stock markets. I don't see it, even though Europe is having a good year, and certainly Korea is, I think, up 60% year to date. But nonetheless, I see still a lot of demand from overseas into U.S. equity markets. So I think it's going to continue. But you know what? Equities are very highly valued, and it wouldn't surprise me to see a correction. Bank of America today said that 60% of their negative indicators for equities are flashing red. So they still don't see it as a correction just yet. One of the people at Morgan Stanley said something similar, but then again, you have Tom Lee of Fundstrat, who still sees a 7,000 S&P by the end of the year, which is not up a lot. It's up another 220 points, something like that. And equities were up again today. So we'll see what happens. But at some point, you're going to have to call back on your equity positions because it is up quite substantially over the last 3 years.
Thank you. That was actually, you answered my next question, that I kind of wonder why in one of the commentaries you mentioned that this week the market shows slightly optimism. I guess these are all connected.
Right, they're all connected. I mean, the market is still very pro-U.S., even though the dollar, earlier this year, the dollar had a good debasement trade. In other words, the dollar went down significantly, but it has since stabilized. And of course, one of the things that China's been pushing is they're trying to get people away from the dollar, and they've been buying big buyers of gold, and gold set all kinds of records this week before it had a correction at the beginning of this week. So you have gold now being held by central banks. 27% of their assets are in gold. 24% of their assets are in U.S. Treasuries. So that's one of the first times we've seen that flip in a long time. So there's a lot of stuff going on. There's always stuff going on. The question is, I will tell you that if you look at when markets get most volatile, it's usually around Fed meetings, which is next week. So coming out of the Fed meeting next week on Wednesday, by Thursday morning, you may set a whole new trend. You may set a continuing equity trend. You may set an equity correction. You may set a bond market doing well from a duration standpoint, or you might see the bond market sell off. It could go, but Fed meetings are the catalysts for big moves in markets.
That's interesting. That's very interesting and exciting. So probably you're excited about hearing our episode 4, hopefully next Thursday, because big week is coming.
Can I just mention on Wednesday, on Wednesday what happens is the Fed announces their rate decision at 2 o'clock. At 2:30, Chairman Powell gives a press conference. It goes to about 3:20. As of right now, I am scheduled on Fox Business right when Powell finishes to be the first one that gets to talk about what Powell said and what I think. So look for me on Fox Business Wednesday, roughly 3:20, 3:30 in the afternoon.
Wow, that's great. Hopefully afterwards we can have the next conversation, and we can talk about your interview with Fox as well. Andy, I think you're answering all of my questions. Do you have any other points to add on this huge week?
Look, we're here at University of New England for the business school because we are very excited about what Norm is doing and what the university is doing in business. And we think that they're going to be, they're really they're not maybe the only business school in Maine, but I think they're the best and they're getting better. So we want to try to help as best we can with these YouTube podcasts. And as people have questions, please write into Golshan or the university and ask what you want us to talk about. As long as it's within my knowledge base, happy to discuss it. I can talk a lot more than just the financial markets, but that is what I focus on.
Thank you so much. Please, if you have any question, put a comment for us or directly reach out to me. You can just search my name, Golshan Madraki, University of New England. And Norm O'Reilly is our dean. We are all working really hard to actually make something meaningful, exciting for our College of Business. Thank you so much, Andy. That was a very productive talk.
My pleasure.